Hi there, it's April 2021. Most of the cold weather is finally over. I hope you are alright and would love to show you the portfolio and the new stock I added to my dollars dividend portfolio. Welcome to my channel where you can follow my journey to set up and maintain a dividend portfolio for my 5-year-old daughter. I started buying dividend stocks for my daughter for at least $50 every month since January 2020. Watch the whole video to find out which stock I bought for April and why. April 2021. I bought the 16th dividend paying stock and I will give an overview of the portfolio and the market in March. This month I will analyze and compare Sherwin-Williams and Cintas Corporation. If you are new and like to follow my journey and see the dividend portfolio of my daughter grow, then please consider subscribing. I upload a new video each month at least. Let's do a small recap from my previous videos and discuss the market and portfolio in March briefly. I have bought 15 dividend paying stocks already. Along the way I got diversified along each sector according to eToro, the broker I use. I have ensured that there are dividend payouts each month. Actually, now the portfolio has at least $1 in dividend payouts each month. So I can invest this directly the next month in a new dividend stock. What happened in March? We started with 3,800 in the S&P 500 and it went up to another all-time high close to 4,000 at the end of March. It keeps on growing and growing. My portfolio is no different and went up from 7.6% to 15.5% in the green and was the best month in growth since November 2020. But of course, these are not even growth stocks. Every stock went up. 6 stocks went up 10% points or more, and to name a few, Cardinal Health up 16% points, PPG Industries 15% points, and Waste Management, the stock I bought 1 year ago, with the best timing for now I guess, is up 21% points. I received 7 dividend payouts in March. Atmos Energy, 3M, PPG Industries, McDonald's, Waste Management, T. Rowe Price and PepsiCo, which totaled in $1.73, the highest dividend payout yet. Still not very much of course, but it is growing. And this will be added to the stock to buy in April, along with the $50. Now we take a look at the stocks I will examine and why I choose these two. As I mentioned in the beginning, I choose to examine Sherwin-Williams, ticker symbol SHW, and Cintas Corp, ticker symbol STAS. I had to find a reason, an excuse to examine certain stocks. The last 2 months I examined stocks based on suggestions I got in the comments of my videos. This month I got an idea while watching a YouTube video. Gen X Dividend Investor, a channel I can recommend, compared the 3 years dividend CAGR of all the dividend aristocrats. The dividend CAGR, or compound annual growth rate, is a way to measure the dividend growth. For example, if the 3 years dividend CAGR is 10%, means that the average growth each year was 10% of the dividend, of course. So if you start with $1 as a dividend payout, this will be $1.33 in 3 years' time. The top 3 consist of AbbVie with 22.3%, Cintas Corp with 22.8%, and Sherwin-Williams with 24.3%. Sherwin-Williams almost doubled its dividend payout from Q1 in 2018 to Q1 2021, from 86 cents to $1.65. So of course I already own a piece of AbbVie, so I'll compare Sherwin-Williams and Cintas Corporation. The dividend yield may be low, but it's growing fast. Do you like how I work? I want to buy the same stocks now and in the future as part of your portfolio with no effort? You can make an account by eToro and copy my trades automatically by using the copy trader feature. Or of course you can follow me over there. At your own risk, I am not a financial advisor. So let's start with analyzing these companies. First, we take a look at what these companies do in short. Sherwin-Williams Company is a company in the paint and coating manufacturing industry. The company primarily engages in the manufacture, distribution and sale of paints, coatings, floor coverings and related products, and has had operations in over 120 countries. Cintas Corporation is an American company that provides a wide range of products and services that helps companies to keep their facilities and workspaces clean and safe. The company provides uniforms, mats, mops, cleaning and restroom supplies, first aid and safety products, and so on. So let's look a bit closer to these two dividend stocks and analyze them using the 7 steps. The first step is to look at the dividend yield, the annual dividend paid divided by the stock price, this multiplied by 100 to get the percentage. A yield between 3 and 7% is considered to be a good catch. The dividend yield of Sherwin-Williams is 0.75% and the dividend yield of Cintas Corporation is 0.72%. Both do not meet this criteria. The second step is to check the dividend growth of over 10 years or more, a sign of a solid dividend and a feature that is attractive for dividend investors. Sherwin-Williams has 42 years of consecutive dividend growth, and Cintas Corporation has 35 years of growth. Of course, both dividend aristocrats, and they meet this criteria easily. The third step is to look if the payout ratio is under 70%. The payout ratio is the amount of earnings paid out in dividends. The dividend payout ratio is ideally under 70%. We do not want a company that pays almost every cent they earn to dividends only. That is too risky. Sherwin-Williams pays out only 24%, which is great, very low with room to grow. Cintas Corporation pays out 30%, a bit higher but still great. Both meet this criteria easily as well. The fourth step is to look at the 5 years dividend CAGR. The dividend CAGR, or compound annual growth rate, is a fast way to measure the dividend growth. Numbers you would like to see is 7% or more, and if that is not met, then add the previous mentioned dividend yield. If they add up to 9% or more, then it's still okay. I choose these stocks of course based on the 3-year dividend CAGR, as mentioned before, but in this analysis I look at the 5 years CAGR. Sherwin-Williams has a growth rate of 14.8%, and Cintas Corporation has a growth rate of 27.7%. Both are very high and meet this criteria easily. The fifth step is to check the trend of the dividend yield, a way to check the ratio of the stock price and the dividend payout over the years. We'd like to see an uptrend where the dividend payout rises more than the stock price. I'll just check out the last 5 years. Both stocks show a small decline, although the CAGR is very high, the stock price went up very fast. Not something I would like to see, so both do not meet this criteria. The sixth step is to look for the year-over-year trends of the revenue of a company. Cintas Corporation shows only a decline in the trailing 12 months, so not bad, but not really good. Sherwin-Williams performs quite well and has an increase every year, so that's very good. The last step, number 7, is looking for an increasing year-over-year cash flow. Both perform quite well and have an increase every year, so this is also very good. Now to look at an overview of the steps and the results. Both companies do not meet the criteria for dividend yield, step 1. They are even far below the 3%. Both stocks are dividend aristocrats and meet the dividend growth of 10 years or more, step 2. Both have a great dividend payout ratio and meet the criteria in step number 3. Sherwin-Williams and Cintas Corporation both meet the criteria of step number 4, the 5 years dividend CAGR, quite easily actually. Step number 5, the trend of the dividend yield. Both companies show a slight downtrend, so not so good. For step number 6, the year-over-year trend of the revenue. Cintas Corporation is not good, but not bad either, and Sherwin-Williams has an increase all the way and meets this criteria. For step number 7, the increasing year-over-year cash flows. Both have an increase all the way and meets the criteria. If you rate all these steps with a 1 for good, a 1/2 for not so good, but not so bad either, and a 0 for bad, then Sherwin-Williams has a score of 5 points and Cintas Corporation a score of 4.5 points. Both companies score pretty well and are not that far apart in score, but I decided to keep to the score and buy Sherwin-Williams. I noticed that there was a 3-to-1 stock split on Thursday, April 1st, which is usually a good sign for the future stock price. Remember, I am not a financial advisor. This is for entertainment and a bit of educational purposes only. Any investment has risks. Do your own research. And so I found my stock to buy. And when the market opened on the 1st of April, I bought for $51.73 Sherwin-Williams, ticker symbol SHW. If you like this video, please consider liking or sharing this video and subscribe if you haven't already. It helps me to grow this channel. Thanks for watching and see you next video.